We just wrapped up recording with Justin, the cash flow cowboy, and boy, has he making some waves in the real estate business. He has started getting into multifamily, finding off-market deals, and currently he is up to 32 units, about to be 59, probably by the time that this episode airs. Incredible story. Patrick, what did you think about today's episode?
I thought today's episode was freaking awesome. The fact that he quit his job before he built up his portfolio and just went 100% was really kind of mind blowing. But the fact that he's had success and then built another business on top of it, we get into all that goals, everything. Make sure to listen to the end. He's got a ton of great nuggets for us. And here it is. How's it going, everybody? And welcome back to the Real FI podcast. I'm your host, Patrick McGrath, with my co-host, James Rippion. How's it going today, James?
Going well today, Patrick. And I'm excited, as always, about today's interview with our friend Justin, the Cashflow Cowboy. So, Justin, why don't you go ahead and get yourself introduced to our listeners and tell us a little bit about what you've got going on.
Appreciate it, James. Appreciate it, Patrick. Yeah, so my story, it's got a lot of weaves to it, but in the long run, I started out probably as like a problem child, arrested twice in my background at the age of 18. But that second arrest taught me a powerful lesson that you guys use, that I use, that everybody who's made the switch into, out of the 9 to 5 and going after financial independence realize is that when you surround yourself with great people, you can accomplish great things, right? You are the sum of your 5 closest friends. If I took a look in the mirror when I was getting in a lot of trouble growing up, problem youth, well, I wasn't surrounded with the best people, right? Then I started to get surrounded with great people. 4 years later, after getting in trouble, I'm walking across the stage as a top engineer in my graduating class, right? Near 4.0, perfect GPA. And my parents were in disbelief. I was a little bit in disbelief, and it was all based off of that real powerful lesson that was learned kind of in the school of hard knocks of you're the sum of your 5 closest friends. Your network is your net worth, right? So that's not where the story ended. I got introduced to Rich Dad Poor Dad while I was transitioning into the 9 to 5 workforce as an engineer. And it rattled me, guys. Like, I was shook to the core. I was a 3rd generation engineer, right? My dad was, and my grandfather was. And that's why I went into it. I didn't know anything else. I didn't know about this thing called real estate investing. I didn't really know much besides like stock investing. And I didn't even know that. I just knew of it because, we're all introduced to it through the, normal world, right? So I got into the engineering job, did really well, but only about 2 years in, at the age of 25, I decided I was at a crossroads. And the decision was either do this thing for the next 40 years, or before I got bills, before I have, a wife, before I have kids, or anything like that, dogs or anything like that, let's make the switch now and pursue real estate full-time at the age of 25 years old rather than, 40 years down the road. So I made a kind of a crazy switch careers completely. My dad definitely thought I was crazy. My family thought I was crazy. But in, the last 2.5 years or whatever, we've gone from, no apartment building units, no investment whatsoever in real estate. In the last 2 years, we've done, we have 5 different apartment buildings. We've created over $1 million worth of equity in those properties. I've done it with a ton of not my own money, right? Because I was a young, dumb, broke, 20-something-year-old. So I used up my money real quick on the first deal, and I needed to keep buying them. And so that's when I got introduced to partnerships. So easiest way to sum up my story is surround yourself with great people, because it'll blow you away at what's possible once you're around really strong, good people that are doing that thing called, they're way ahead of you in life, and they're turning around, they're extending a hand to help pull you up. And so what the future looks like is more multifamily. That's what we love, and that's what I do. A lot of off-market, direct-to-seller multifamily assets.
Justin, I love that story, man. I think we probably got a lot of listeners who, might be on the path of, choosing which direction they're going to go in life. And of course, we all know at this point that you're heavily influenced by your peers, people you surround yourself with. And, that's where a lot of your story comes from. What would you tell that young person who might be going down a path that is, not leading to a desirable outcome, to course correct? Like, what advice would you give that person? Because, we all deal with stuff when we're younger. We have these choices to make. We could do the stupid shit that, our friends are doing, or we could choose to level up and do something else. So, what is your concrete advice to that person who's maybe looking at that crossroads? And maybe, on top of that, it might not be that person directly. Maybe it's a father with a child that's dealing with that too, and they're looking for advice. So having lived that, what would you say?
So I love telling this to, especially because I'm around a lot of younger, aspiring investors, and even through my real estate network, I'm around some older, have kids or something like that, and they see like, wow, this guy's in his 20s doing this. I wish I could do it. And at the end of the day, it's really, you mentioned it early on, it's really not that hard. Like, regular people can go out, doesn't matter what your background is or whatever, and you can do this. And I think everybody needs to, first of all, take a step back and understand that there's nothing special about myself or you or Patrick or whatever it may be. Like, obviously we're motivated, but the important thing is, one, you have to get educated, right? If you want to break this down into 3 steps that anybody can do to start, achieving that financial independence. 1, get educated. So you need to kind of know what you're trying to do, right? And for me, what that looked like was books and podcasts, anything related to real estate. I was just consuming it at an incredible pace, right? I need more of this. I need more of this. What is this super interesting thing called real estate investing? And so Bigger Pockets was a huge resource for me there. Rich Dad, Poor Dad. So many other books. I mean, I have a bookshelf behind me full of just those kind of starter mindset related books, right? So once you have the education, that's all great and dandy, but what are you going to do with it, right? So step 2 is that's when you need to start surrounding yourself with the people that are going to encourage you. And what did that look like for me? That was starting to go to local meetups, right? So at the time I was in Indianapolis, and I went on Facebook and I went on meetup.com, and I typed in multifamily real estate meetups in Indianapolis, or on Bigger Pockets, meetups in Indianapolis, right? And I just started going to every single one. And this was when I was still in engineering, right? So I was still in my full-time job, but that got the wheel going. And the cool thing, you guys might love this. I don't know if you have experienced this. I went into a couple of those meetups, and I looked at some guys and gals that were in there that were crushing it in the real estate space. And I looked at them and I go, there's nothing special about that person. Like, I can run circles around this guy, and he's out here making me look like a fool. I think I'm all big, smart, tough guy in my engineering degree. And this guy's just, working half as much as I am, making twice as much, 3 times as much income passively. And that for me was like, well, I want to do it. Like, if this guy's doing it, I can do it, right? So that's step 2, local meetups. And then once you're ready to like really level it up, I advise joining mastermind networks, because that's like taking the surround yourself with good people to the next level, right? You're paying into a network of other real estate investors that are going to have all the same business issues that you're going to struggle with, obstacles that you're going to have. They already have gone through them. So it just speeds up the process exponentially and helps you scale faster.
Yeah. I mean, I know I say this all the time, but I stand by each and every one of those 3 steps. James and I have talked about it multiple times. And I love that you mentioned that, because the same thing happened to me, like going to those real estate meetups and seeing the successful people in there, and you're going, man, that guy or that gal doesn't have any skills that I can't have myself. I can't build myself. I can't go out there and make myself. They're not smarter than me. They don't have different connections than me. It's just that they've actually done what our hats say. They decided, they committed, and they're out there just taking the action. And that's really what solidifies it. And like you said, when you are hanging out in your network of your friends and your family that don't understand investing, that don't understand financial freedom, you have all this negativity and all this unknown going on. As soon as you place yourself in a room with 30 or 40 other people that are doing it and that are successful and that are cheering you on, you go, hey, all these other people are doing it. Why not me? And then that's what really, like you said, kickstarts your mindset, kickstarts your belief system to go out there and actually make it happen. And that's kind of when, that journey really starts. So let's talk about how your journey started. Like, you started going to these meetups, you started seeing these other guys, and you're like, man, I can do this. Let's break that down on what happened from after starting the meetups and getting that knowledge.
Yeah. So 25 years old. I'm 25 years old. And this is mid-COVID. So middle of COVID, I decide I'm quitting my engineering job to go into real estate full time. And at that point, my investment portfolio was a house hack, right? 2-unit property where I checked my ego at the door. I lived in a basement unit while I rented out the upstairs, and I was making, $200 a month cash flow. It was phenomenal. It was great. And living for free, which you want to throw that on top, it's like $1,100 a month, right? So that was huge for me for understanding a little bit about real estate. But where it went from there is I knew when I was leaving engineering, going into real estate, I still needed some form of active income, right? I'm leaving an active job and I don't have the passive portfolio built up yet. But what I wanted to do is I wanted to make sure every day I'm waking up and I'm doing something related to real estate while also earning income. So I got licensed as a realtor. And what I did was I niched down and I focused only worked with investors on small multifamily deals, right? So I didn't go do your residential real estate sales where I'd learn a bunch about kitchens and backsplashes and high-end luxury stuff. That's not, because that wasn't the goal. I wanted to learn how are these other investors buying properties, specifically multifamily properties. So I did that for about a year where I got a bunch of income, had the nest egg and stuff. And then that's when I felt like, all right, I'm ready to do this, right? So 2021 rolls around. I join a mastermind network. So I'm now surrounded with everybody I need partnership-wise to go out and buy multifamily. Summer 2021, we buy a 10-unit apartment building in Indiana. And for everybody that's familiar with the multifamily space, we bought it at $35,000 a door. And this was a 1995 build property. So in great shape. It was an absolute home run. And the funny thing about it all, Patrick, you're going to love this. I had no idea it was a home run when we were buying it. Like, I was like, I don't know. I was so scared to buy that first deal because I just didn't know. Right? You mentioned everybody has somebody in your family that's like negative and stuff like that. My family was like, don't do it. Right. And nobody else, like, that was the first apartment building that anybody in my family has ever purchased. Right. Just put that into context. So I've never gotten encouragement of going out and buying it. And that's why that real estate mastermind was so important. Those people were so important because they were like, do it, take action, do it. And now I look back and, Patrick, James, I do 1,000 of those deals if I could, right? It was a fantastic home run. So that was 2021. We did that 10-unit. We kind of learned about, that was a JV partnership. 3 of us did that, 1/3, 1/3, 1/3. And then 2022 rolls around and man, we went after it, right? So I had 4 under contract at the same time, had to wholesale one, had to wholesale a couple here and there just because I didn't have enough time to deal with it all. And those were majority in the Midwest, and we've closed those. And in 2023, we did a big wholesale deal earlier, and now we're closing a 27-unit apartment building here, probably by the time this episode launches.
That's amazing. That's really amazing. And like, to put that into context a little bit for the listeners out there, like, we typically are buying between 85,000 a door to like 100,000 a door. Like, I picked some up at like 75,000 a door a couple years ago, but that's kind of like the sweet spot around here. That's a home run for me. But you're talking about a 10-unit for 350 grand. Like, that's amazing. For the listeners out there that are wondering, like, how the hell did you find this, grand slam of a deal right off the beginning?
Yeah. So I'll do a shameless plug real quick. NoStressDTS.com. That's my company. Just write it down if anyone's listening. So I go all off market to find my properties. And the reason I mentioned that plug is we've kind of packaged our business up to try to help other people find off market deals as well. But the beautiful thing is that deal in specifically, we sent a cold text message to the owner. Just like I still have the text message saved like as a picture. And it's literally just the shortest, sweetest little like, hey, Ed, how's it going? Saw your property, XYZ. Let's chat, see if we, for an offer or whatever. And then we had our name at the bottom. And it just so happened that Ed was overwhelmed he had a local business. He had 17 other single family homes. And for some reason, this 10 unit was just at that isolated time, at that moment, was too much for him. So we stepped in, we got it under contract. We helped solve his problem of this is just not helping him out. He's so stressed out, right? He gave us the price. We said, we'll see if we can make that price work. Totally not knowing that it was an absolute home run at the time, like I mentioned. And we moved on, we bought it. And we brought rents from like 465 average, and now they're in the 800s, 850 average, right? So that's unbelievable, cash flow. And now we're sitting here waiting for rates to drop, and we could pull out 100% of our capital that we invested and some, right? And that's just one, right? We did this multiple times on multiple other properties. That's how in 2.5 years now, we've created over $1 million in equity in these properties. Is because of going off market direct to seller. We've negotiated awesome prices where we come in and then we're doing operational and like light renovation. We're not overhauling these things at all. Light renovation work that we're able to give the seller the number that they wanted, and then we're able to go and like double the value of the property in 18 months. And then kind of, rates obviously shot up, so we're in a weird limbo whether we want to pull that equity out or if we want to just keep coasting on our 3.5% interest rate, which is kind of nice too, and just keep cash flowing. So that's kind of why we've had so much success is going that direct to seller route and marketing directly to those owners of properties.
So for each property that you've acquired, has each one been off market direct to seller, or did you buy some or any of this, off the MLS?
Every single one of them has been off market.
Okay.
Yeah, we found we're capable of getting massive discounts. And maybe this will help answer it, James, for you a little bit too, is like, look at who I was at the time trying to find and buy properties. I'm a 26-year-old with no job, right? And no connections really within the real estate realm in that area, because I didn't even grow up in Indianapolis. I had moved there for the job, right? So if I go sit down with a broker and I want like the goal for them to send me kind of pocket listings, right? Those are the good ones. They're not going to take me serious. They're going to send it to the guys that they've had, they grew up with or they've had long relationships with. So I'm so low on that totem pole to start out that I had to be proactive about it. And that was kind of out of necessity. We started going off market. And then now, with the engineering background, then I just made it into kind of its own business funnel and systems processes. And, and now it's like this full blown business where we're in, multiple markets. We have 10 plus partners, and it's this self-sufficient machine now. But it was pretty much out of necessity that we were doing it rather than going through brokers or the MLS.
Gotcha.
I think that's really important for the listeners out there. Go ahead, James.
No, you go. I think I got a little bit of lag. You take it.
I think that's really important for the listeners out there, because James and I have been talking about this because we both are looking for off-market deals. The last 4 properties that I've bought have all been off-market. And I think a lot of people think there's so much work that supposedly needs to go into finding these off-market deals, the unknown about doing it. I got to talk to sellers directly. I don't have an agent. How do I do this? How do I do that? And it's like, look, out of necessity, you figured the best way for me is to go direct to the seller, but you didn't put the cart before the horse. You didn't worry about how you were going to get it under contract, how you were going to close it, how the inspection worked, how the financing and all that worked. They're like, let me find the deal first,
Yeah.
and then I'll figure out the next step. I'll take it one step at a time, right? That's how it
Exactly.
goes.
Yes, that's
Yeah. So
exactly how it
you
works.
you find the deal, you see if it works, and then you're like, okay, what's the next step? Okay, I need a real estate attorney to write up the contract or whatever. Like, I gotta find someone to do the inspections. Just take one thing at a time, and you'll learn so much from that. And now, 2 years later, you have an entire business around it. And it's because, like you said, the easy thing to do is to go out, go talk to 5 different brokers, tell them you're interested, and then just sit back and wait. Or you can be proactive and know that there's deals out there and someone else is going to get them if you don't do the work. So by putting in that little bit more effort, you jump ahead of 80% of the people out there.
Exactly. It's honestly really, it feels like the only way to buy a property right now in this current market environment where there's just supply is just cripplingly low out there, where there's nothing hitting the MLS that you would even, even comes close to cash flowing and making sense at all. So you kind of have to do that proactive route. And the reason I did that shameless plug earlier too, and the reason why we built this separate business, nostressdts.com, is for exactly what you mentioned. I thankfully had an engineering degree when I was going to start, background when I was doing this direct to seller stuff, because a lot of it is technology based, a lot of it is systems based and processes, or it gets a bit overwhelming. And it's not like the easiest thing to build in the world. So what we've done is very similar to how there were so many good people in my life that kind of turned around. They were at a much higher point, right? 3,000, like my mentors have 3,000 apartment building units, right? And I get to call them up and talk to them and stuff like that. And they get to educate me. The same thing where they kind of had the lending hand to help bring me up. Well, we started doing that this year where we turn around and we help launch other people's direct to seller businesses for them. So I was able to package all the technology and resources that I use for our business. We can just package it up and then go set it up for somebody else and kind of provide them the help that they need, so they don't have to spend 2 years building it. They can just start talking to, owners tomorrow type stuff. And so that's been super effective. We have a bunch of clients that are super, super happy about that. But at the end of the day, it's the only reason I did it in the first place is because I'm trying to give back, right? Because we don't make any money off of that thing. All our money is made off of buying wealth, generating properties, right? In my own business for buying it. It's just something to try to help out, try to give back, which I'm sure you guys realize with this podcast, this is your form of giving back. All this education that you guys have got, the success that you have, you can now turn around and help other people achieve the same thing, because that's what we're all trying to do here, right? Financial independence. That's what we're all trying to get.
For sure. Yeah. And anybody listening, make sure to share this episode, give back to other people as well, spread the love. So, when it comes to your No Stress DTS company, what are some of the systems that you've got in place to find and secure and get those off-market leads? Like, what are you finding is providing a very high conversion rate? Are you guys doing text, calls, postcards, mailing letters, knocking on doors? Like, what do the systems look like behind the scenes?
Well, maybe you can tell me this, James. How deep do you want me to go? Because I can give you guys, I can get super detailed if you think that'll be beneficial.
Yeah, go deep. I think the more depth you can provide, the more likely you might be able to convince a listener that they don't need to reinvent the wheel. And you go check out nostressdts.com. So provide all you can.
Here's the wheel itself, right? So what we'll do is we're targeting multifamily assets. So we try to be a little bit more targeted in our approach. We have less opportunity to mess up because there's less larger deals out there, right? So how we have it set up, we go get a list of properties. We get that list of properties skip traced. For anyone who doesn't know what skip trace means, that just simply means getting phone numbers and owner names and contact information based off of that property address. Then we take that gets dropped into the system, right? And that's excuse me, that's where the money happens in the system, where we're setting follow-up dates, we're changing, we're kind of working them through this lead funnel where we're reaching out, prospecting. Hey, are you interested in hearing an offer? And what does that prospecting look like? We focus probably 95% on cold calling and cold texting. We get a much better response rate through the cold texting, but we get a much, if you want to call it, better conversion. Actually, like, you kind of do need to talk to them on the phone for kind of keeping the relationship going. So it's still important to keep that cold calling aspect there. So that's what we'll do. I actually have brought in to my business a full-time acquisition specialist that is prospecting. So their job is 9 to 5 every day to reach out to these owners, calling and texting. Anytime somebody says, time to hear an offer, that's when they're now a hot lead in our system. And we want to have experts following up there to build the relationship, right? So myself, right, I could talk to you guys about multifamily not all day long, right? And I have other partners that can do the same thing. So we have somebody that does prospecting. Now it's time to actually build a deep relationship, get financials, meet at the property, walk the property, offer negotiations, right? So that's where the next kind of set of our team takes over. And from there, we have certain offer templates, we have certain resources of questions that we need to ask, so that we're kind of making this into its own little like self-confined system and business that you can replicate over and over with, numerous amounts of leads. So in our system right now, we have, last time I looked was Monday, 5,600 leads. So 5,600 different addresses, 5,600 different addresses of multifamily properties we are trying to buy and we are marketing to buy. Now you can start with 500, you don't need 5,600, but it'll start to grow over time. And you want to make sure your system is built for the scaling side of what we do.
That's fantastic. And I think that's so important that you, like you said, you can start, small and branch out. But the fact that you have this system in place, you've been successful with it is really important because, and I like showing this aspect too, because there is some people out there that don't want to reinvent the wheel. They don't want to use the deal machines and the prop streams and do their own postcards and field calls and text messages and all that. Some people do like having a service like you're talking about. I know myself personally, I've had success, sending out postcards and doing it myself, and I've taken that route. But I also know of people that have hired out services like you guys offer that have been successful as well. So, one of the important things about that we like to bring on this podcast is all the different aspects where you're able to, find properties and close deals, whichever way makes the most sense to you and your time and the amount of effort that you want to put in. And I think that's super important. And I really love that you found success and you created a business to then help fund your own deals. So that's really freaking awesome.
How do you guys normally structure your deals when you go out and buy them? Are you guys doing JV partnerships? Are you buying them yourself?
I've purchased all of my deals myself. And that is with one of the beautiful things about finding these off-market properties is typically you're able to try to get some sort of seller financing. Yep. So we have structured ours. Every single one of the last deals that we have bought has had some form of seller financing, whether that's them financing the down payment, whether that's them, financing the majority of it. Like the last one we put 15% down. We got 4% interest over 30 years with a 5-year balloon. We've had other ones that they financed the 20% we need for the down payment, and we went and got financing from the bank, but we got 3 years to pay that 20% back, which what we're doing is we're refinancing, we're doing a cash out refinance. We'll pay the owner off and take our equity. So it's really nice because you're building the relationships with these owners to get them to at least, get an offer from you. And then you can sweeten the pot with your offer template on providing them with more money the longer they hold it or if they hold something. So, I'm sure that's probably
why I was wondering if you've done if the off market, because the beautiful thing about off market is it allows such a much easier conversation change to the creative financing side, right? And we, like, if you looked at our offer templates that we provide, that we use and we provide for our clients, it's literally like option 1, normal transaction, right? This price, or option 2 and 3, much higher prices, look at how appealing that is, but we're going to have to agree on some terms to do that. And we've, in the multifamily space, it's a little bit different to be pitching a bunch of creative financing, but I think a lot of people are more receptive to it now, given the marketplace that we're in, right? So we're in a marketplace where they could have sold a year and a half ago for 1 million, and now same building, everything's the same except interest rates have gone up, and now that same property you can only offer 850,000 or something like that, right? And they're not happy with it because they know, they looked on Zillow, whatever it was, a year and a half ago, and they want, or somebody told them what it was worth a year and a half. So we go, well, we pay 850 now, or maybe we can do 1.1 on terms. So what do you want to do? Because the 27 unit property that we're buying right now is actually, we're assuming the existing debt on that. So that's a Freddie SBL loan that has 9 years left of a fixed interest rate at 3.64%. And we're like, yes, please. Can we please assume that loan? Like, yes, I want. So now we're probably like, we look at our exit strategy and we have so much control over the exit because we can essentially ride a cash flowing asset for 9 more years if we needed to. Or let's say nobody has a crystal ball on interest rates, but if they do drop down in the next 2-3 years, 4 years, it's like, all right, well, now we can actually go refinance at a decent enough interest rate. We're not going to crush our cash flow on the asset. And then now, then that's, you guys know how the returns work when you get a refinance in there and you can return some of the capital, start getting those exponential numbers, right? So that's like the beautiful thing about that deal. And it was all because you have the existing relationship that's through the off-market relationship building consistency that you do direct to seller. And that's how you can kind of pitch those different strategies versus going through a broker might be a little bit harder.
I think that's what's super important is when you have that broker acting as a filter, you're not going to be able to really uncover what the true motivations are. What I love about your strategy is you're offering them different opportunities to solve their different problems, and you're having those conversations with that seller to find out what that is, instead of just like, shooting blindly with the broker, trying to figure out, blind guessing what's going to be the best offer. You could offer them cash, seller financing, bank financing, or something in between, and you can give them 3 different price points to figure out, do they need to close quick? Do they want the most money? Are they okay with, do they have to redeploy this capital, or can they do seller financing? So, when it comes to structuring those offers, that's key. Don't think it has to just be one way, black and white. Give them an either or to choose from. And I found that when you give them the either or, it's a less likely to be a no, because then they think they're making a decision. But both happen to work for you. Yeah,
there's a sales psychology to it as well, where if you present, it's like, have you guys read Never Split the Difference? Chris Voss. So essentially it's like, by giving them 2 options, they're more likely to weigh the options against each other versus yes or no, right? Versus go with your deal or not. So it's like really funny. Like you give them 3 options, they're just weighing them against each other. And that means they're going to, hopefully sell, versus whether they just, don't even accept your offer or not. So that's like a really cool thing that we've noticed in kind of presenting multiple, different routes to how this transaction can go down.
Yeah, and I think one of the most important aspects that the listeners need to understand is in a real estate transaction is that as long as the 2 parties agree, that's all that you need. Like the 2 parties, if the 2 parties agree that the deal makes sense, how you can be as creative as possible. Like if the buyer wants equity on something else, like you can offer up your equity that you have on another property as part of a lien. If they're worried about their property, you can get extremely, extremely creative and think outside the box to make these deals work. You can space out the balloons for the tax, for when they're going to take their tax hit. I've never done that, but you could have half the loan due in 3 years and the remainder in another 2 if they're worried about the taxes. There's so many different things out there when it comes to creative financing. There's not a box. Like literally it's infinite. It's infinity. And once you wrap your head around that, people are always like, well, why would the seller take a 4% interest rate if interest rates are at 8%? Well, it doesn't matter to your mind. Doesn't need to understand why they're going to take 4%. Okay. Their mind wraps around and says, hey, that works for me. Like, you just have to throw out the options and see what happens. And it's the uncovering process, it's the relationship process. And I love sales, and it is a big relationship thing. It's built on trust. But the beautiful part about a real estate transaction is as long as the two parties agree and it's legal, it really doesn't fucking matter what the terms are.
Yeah, I agree. We actually did a whole, so you mentioned like everybody agrees on stuff. When I occasionally I'll wholesale deals, right? And it's not my core business. It's just more of, right, I was in my 20s buying properties. I need money every now and then, right? So I'll need some capital to put into other deals, right? So I always do a double close when I do a wholesale transaction, because I want to do the A to B, right? Me and the seller, I want to work out a deal. And then me and the eventual end buyer, I want to work out another deal. And I don't, like you mentioned, like whatever everybody agrees on, everybody's happy on what they agree on until they know about, like, maybe I made a profit in between, and then now they're unhappy. It's like, well, we agreed on it, right? So that's why I like to do the double close, where it's two totally separate transactions. Yeah, it'll cost me a little bit more in closing costs, which is fine. But that way, then everybody's going home happy, right? Me and the seller have our transaction, they're happy. And then me and the end buyer have our transaction, they're happy. They happen on the same day, and then I get whatever the spread is in the middle. And so we've been able to do some pretty massive.
I was going to say, I've never done a double close, so I'm kind of curious, the way you work it out, are you, funding the first closing and then the end buyer is funding it again and then you're getting proceeds, or are you using just one lump sum from the final buyer to buy it from the seller and then you're not bringing any money to closing? Like, how's the money part working for the double close?
That's a funny question, James. So I didn't know that answer until I did one. Which is like, Patrick, you mentioned it earlier. It's like people are too worried analysis paralysis of figuring out like all the details before they just do it. I was in the middle of a double close and I wanted to know that exact same thing. And actually, we've done a few of them, and we've done it two different ways. One is it all kind of depends on the end buyer's bank. If the end buyer is actually getting a loan to purchase it and their bank is okay with it, they can fund the A to B transaction with the funds from the B to C transaction, right? That makes sense. I just want to make sure those two happen. So that's good for me, because then I don't need the money in between. Like, I don't need to actually have the money to do the A to B, like buy the property and then sell it, right? So that's a unique situation. That's only if the bank is comfortable with it. Now, that bank is not comfortable with it, or if they're using some other financing or cash or whatever it may be, what you can do is you can actually use what's called a transactional lender. And if anybody's listening and they want to find out more about that, reach out to me. I have a great connection for a transactional lender, but they'll charge like 1%, right? And then they'll essentially, it's the best. They transactional lenders love this transaction because they get 1% and they lend it out money for like 3 hours, right? And then they get that money back, right? So they're literally giving me money just to go buy the A to B, close the A to B transaction. And then the B to C transaction happens. And then the proceeds from that pay off, the original transaction. And I walk away with the, whatever's left over. And obviously I pay that 1% to the transactional lender.
And now I got to ask the transactional lender. First time, I've heard of gap funding and stuff like that, but the whole use of this and double close is kind of cracking my head open. Are they, all right, so now are they doing 100% of that 3-hour window, or do you still have to put any capital in?
I put zero capital in, nothing.
Yeah.
Nothing. And for 1%, it's the best thing in the world. It's nothing. Because even if you were to like go to your buddies or your friends or something, they'd still probably want more than what this transactional lender will cost. And these are like the guy that I've used. It's like they're like a massive conglomerate, right? They love this stuff. Literally 3 hours, you make 1% on your money. Like they'll do those all day long. So they're looking for them. And if you can provide them with those opportunities, they'll definitely land. And all they need to do is connect. You can connect them within like 24 hours of the closing too. I mean, they're not going to be happy about it, but really it's like you can give them, it can be on a tight timeline as well, where they'll they'll turn around, they'll talk to the title company, they'll make sure all the title works checked out, and then that's really what they need to kind of proceed forward.
Extremely fascinating. I've
Yeah.
never heard that one before, and I've heard a ton of people doing it. I've always wondered how that
Yeah.
works. So appreciate the insight onto that, because that's super unique. You know, you have $1 million property, they're making 10 grand in 3 hours, you know, and then you're probably swinging, you know, a nice 40 or $50,000 clip. So, you know, that's a pretty sweet way to do it. So let's talk about your current portfolio. So you said you got 5 properties, about $1 million in equity there. What does that portfolio consist of? We know you have a 10 unit and you have a 27 coming that should be closed by the time this episode comes out. What's all the properties in between that you've been able to acquire in the last like 18 months?
We've had a ton of success with, right off the bat, finding like smaller multifamily owners to buy their property. So we actually have a 6-unit in there that we converted to Airbnbs. It's by a bunch of wedding venues in kind of a tertiary market of Indianapolis. And we've been, I mean, that thing's been just churning and burning and making us a ton of money. So we've been super happy with that. Very similar to how I structure my multifamily deals. I have like a short-term rental property manager that runs the day-to-day. I have some partners on it and stuff like that. So it's not as very big time commitment for me. It's just, we looked at it of what's the highest and best use of this property where it's located, and short-term rentals was that. So that was our Airbnb conversion. And then other than that, we have a couple other 8-unit properties. So I think we have 2 other 8-unit properties, one in Michigan, one in downtown Indianapolis, and then this 27-unit one. And, you know, for instance, you mentioned, we talked about direct to seller. One of the 8 units, the guy had a failed closing. The buyer didn't show up the day of closing. And we had a relationship with him, and he was pissed off. He had done months and months of trying to get this thing closed. Guy doesn't show up. Then he goes, well, do you guys want it? And we said, yeah. And we went and bought it, and it's been fantastic. We brought rents, you know, from $1,100 to $1,500 average with some renovations, and they're all actually individual condos, so we can sell them off individually and make, you know, 2x what we paid for it, right? So that's been huge, but that was very much relationship driven of how that worked. The other 8-unit that we bought was in Michigan. I was boarding a plane. I was on a snowboarding trip, boarding a plane, and he goes, sorry, I know we've had a great relationship, we've been talking a bunch, but I happened to mention that I was selling it to another business partner of mine in a totally different business. And he said he can offer more to buy it. And so we're going to go with him because we already have like a business relationship and whatever. And I am legitimately boarding a plane. So I'm the last one to board because I'm on my computer, like typing out a new offer. And I go, all right, I'm going to send you over an offer. It's the best we can do. It's going to be way better than the other one. Right. And by the time I landed, he had accepted it. And the big thing I told him too at the end of the email was, this should be enough for you to go to that business partner and say, hey, it's in the financial best interest of my family to accept Justin's offer. So we're going to go with that. And I landed, we got it accepted. And that's another one. We've doubled the value of the property. Now I had to pay 20% more. That hurt, right? I didn't want to pay 20% more, but if it means getting the deal, then who cares, right? So that was all relationship built. Like the fact that he told me he was going to go with another offer, relationship. That was the only reason he said that, because he was a good dude and we had established good conversation. So it was really cool to kind of see those direct to seller strategies. They really work out and they turn into massive discounts.
I got a question for you, man, because I know Patrick has lived through this time and time again, and I keep bringing this up for our listeners because this is a different field than even large multifamily or single family residences off the MLS. What does the life cycle look like for one of these deals when you're pursuing it off market? Like, you've made first contact with a potential seller. How long does it normally take to go from, you know, that first conversation to closing? Because I know Patrick has worked some of these sellers for months, if not years, before he's actually been able to close. And I'm sure you've got stuff in the pipeline that is like that as well. But if you had to kind of estimate, you know, what that life cycle of a deal would look like, what's that timeline look like?
Well, correct. We have some leads in there that we've established awesome relationships, but they're just not ready to sell now. But we still, hit them up every month, right? Just touching base every holiday, right? If you guys want a hack, direct to seller hack, everybody write this down. We're coming up on any holiday, Labor Day, Veterans Day, Memorial Day, whatever it may be, July 4th. Send them a text message that just says Happy July 4th. Don't talk about the property. Don't mention the property, because then that comes across as transactional. Just talk about, hey, Merry Christmas. Hope you're having a nice time with your family and stuff like that. So we do that along with reaching out every month just to nurture those long-term leads. But if they are ready to sell, James, that's when you need to be quick with it. And it could be within a month, right? So I looked at that 8 unit I just mentioned when I was getting on a flight. By the time we added it to our system, and 2 months later, we were in deep offer negotiations, right? That's one of the faster turnaround times. The one that we did that was the 10 unit was another one of those fast turnaround times. We just happened to do a mass text message and it worked, right? The other ones, this 27 unit, this has been over a year process, right? So it's hard to say exactly. It does help where if your initial contact happens to line up with some seller motivation, that will definitely expedite the process. But if they're not motivated, it doesn't mean forget about them. It means put them in your system, have that system that's helping you with follow-ups, tracking follow-ups, and nurture those leads over months to years, because it's really not that hard to send a text message once a month, right? But if it means, buying a property at a 25% discount, and, now we're, turning that property into $1 million of equity that now is going to go, your family can live off for a generation. You're like, okay, I'll send a text message every month. Like, I don't care, right? It's well worth your return, your eventual opportunity cost for it. So,
well, and not even the discount, because in my market, like, you cannot find small, mid-sized multifamily listed. And what is listed is either like I'm talking really rundown, like mobile home park, borderline trailer park. Like, I like to distinguish between the two. And or just like a package of like single families that look like you don't want to be caught anywhere near, physically. So, not even just finding a discount, just having the opportunity to make an offer is what I think is valuable in this market today. A good discount to the market value, icing on the cake right now. I mean, there's just not enough inventory to like really complain, as long as you have an opportunity that's placed in front of you.
Yeah, we're seeing the exact same thing. Supply is super low. So what I encourage everybody to do is submit offers. They're not going to get accepted, right? Many of them are not going to get accepted. Some might, but the offer submission now is going to be deals in 5 to 6 months from now, right? So if you're not submitting them now, because like I mentioned earlier, right? They could have sold their property for $1 million last year and a half ago. Now it's only worth $850, right? Or that's all we can afford to pay as the buyers. Eventually, they're going to come to terms with the fact that their value has gone down because of interest rates, and they're going to go back to the people that submitted offers. And if you built the relationship enough and negotiated enough where you submitted an offer, even if it was a little low, they might come back to you in a little bit, and that's your opportunity. So we've been submitting more offers, I think, than we ever have in the last 6 months. And that's just because those are almost like a postcard that you want on the fridge type situation. Like, you just want them to have something physical or electronic in their email account that is showing you were serious enough to give them numbers and an offer, and when they're ready to sell, they'll come back to you.
I love that. So let's get into that a little bit in regards to, your personal goals and your company goals. You said you're submitting more offers, things are coming down the pipeline in the next 6 months to a year as values are coming down. Like, what metrics are you looking at personally and for your business that is going to be taking you to where you ultimately want to be?
Damn, Patrick, you didn't need to ask me this. So the big issue that we are addressing in our business is related to KPIs, right? We don't have a ton of key performance indicators. We've just been, right? We just built this thing and we've just been doing it, right? And that is great, but you need to be tracking certain things within your business. So what we've done is we used to use a certain system, and we've rolled out system 2.0 that has the functionality of actually keeping track of some key performance indicators, right? And so what we're going to be most focused on is going to be like, how many offers are we actually putting out, right? How many, relative to what's our communication look like? Like, how many calls are we making? How many text messages are we sending versus the offers? Now, the other thing is speed in this business, right? We want to actually have duration tracking in regards to, if my guy that does the prospecting, right, he's calling and texting, and Joe Schmo or James and Patrick say they want to sell their 10-unit property. If somebody on my team doesn't follow up within 24 hours, we look like idiots. Like, what are we doing? Right. So we need to, that needs to be like, all right, the clock starts. It's a hot lead. How long is it taking us to follow up with people? And that's just kind of the business development stuff relating to direct to seller that you want to keep track of, is like, how quickly are you following up with people? How quickly are you getting them offers? And then if you can track some metrics like, hey, who did your skip tracing for you? Maybe it was a bad skip. Like, where'd you pull your list of properties from? Those are other stuff just that'll help kind of in the background of us trying to convert more, right? But
I think that answer is super important, though, for all of our listeners out there. And I loved your candidness, because you're having success without having everything dialed in perfectly, like that you need to be and want to be. You're like, hey man, we're just out here doing it. And now you're realizing, hey, something might be slipping through the cracks. We need to tweak this 20% to get us that next 50 to 80% to help us hit our personal goals, right? And I think that's really important, because you could put all of the amazing systems in place and try to track all the stuff, but how are you going to track something you're not doing?
Yeah.
How are you going to know how to improve something you haven't started, right? So I think that's extremely important, and I really appreciate you being honest with us about not having it dialed in 100%, because you are having success not having it dialed in 100%. So it really just proves my point on going out there and starting to take action and starting to, make your offers, starting to do the text messages and all that, because you can have success just doing more than the next guy. And that's what you're doing. And now you're dialing it in. So I think that's really important, and I kind of want to dive into this now, is like, what is your goal with you and your partners? Is it a unit number? Like, are you guys like, hey, our goal in the next 2 years is to hit 100 units or 200 units? Or is it a equity? We want to have 10 million in equity underneath our belt, or let's get into that a little bit. Like, what is the goal there?
So I have a personal goal, that I remember being at like it was a real estate event or whatever. And I was always, when I first got started, I had a mentor, and he said, if you can buy one property a year for the next 15 years, you will be the top 1% of your friend group. You will have retirement figured out, everything. Fit one property a year for the next 15 years, which you're like, one property? I can do that. Like, that's not gonna be that hard to do, right? But I took that, and as I've started to realize I want to scale much faster than one property a year, right? I'm full-time in this stuff. I have a goal of 300 units by 30. And originally it was 30 units by 30, but go to enough real estate events and people say 10 exit, 10 exit, 10 exit. It's now 300 units by 30. And the beautiful thing is, because of that 10x mindset, I'm like, okay, well, what do I have to do to get to there? And that's going to be like, I can't wait for deals to come on the MLS, because there's no way I'm going to get to 300 units waiting for that. So we have to build a direct to seller business. Like, this is going to be the only way that we can do this, right? So we have had conversations with some of the larger units that are going to start helping me get to that goal, right? That's the mission. That'll be my financial independence, 300 units by 30. And with that, I can now focus my time on different businesses, bigger opportunities, right? 100+ unit opportunities. And more importantly, guys, you guys know this with the real estate realm is if you have the financial independence, kind of freedom over your time, you can now have control of who you're spending your time with more and deepening some strategic relationships. So you can start taking your time and for free or whatever, shadowing somebody that has 3,000 apartment building units or something like that. You don't need to worry about, paying your bills, right? You already have the passive income for that. So that's going to be the biggest focus, is leveraging the people in this industry once that financial independence is achieved. But yep, 300 units by 30, that's the goal. The only caveat to it is a lot of people have unit count goals and they'll just be like a 1% investor in 300 units. That's not moving the needle, guys. So this is 300 units by 30, significant ownership in these 300 units that are actually going to provide the passive income for financial independence.
That's awesome, Justin. You're well on your way, man. You might have to 10x your goal one more time, because you're 59 now. It's going to compound on itself so quickly. So who knows what the future holds? I know we always underestimate what we can do in a long period of time, and kind of overestimate what we can do by tomorrow. But we'll see what the future holds for you.
Yeah.
What are your thoughts on like syndicating, getting into syndications, running deals in that manner? Is that something that you're pursuing in the future, or what's your thought there?
That is the next step in the process. So the only reason we haven't syndicated anything yet is just simply because we've been able to buy all of our properties through a joint venture, JV partnership structure. And for me, that's just a little bit simpler. I don't have to go through all the paperwork for syndication, raising capital. As we start to get some of these larger assets under contract, we're going to go down the syndication route, because that's kind of the best way to go ahead and purchase some bigger assets.
I think that's really important to know for the listeners out there, is when is the time to start going down that process of joint venturing, partnerships to expand, and then possibly that syndication model. And it's to each their own, on what their ultimate goals are, personally, professionally, business wise. But I love that answer, because it's like, look, you have to know when it's time to go to the next level, or even if you want to go to the next level. I know me personally, our goal is to own 70 units personally with no other partners.
Yeah.
And that's basically like owning 300,
exactly,
with like 3 or 4 other people. You know what I mean? So it's like, which way are you going? And I think a lot of the listeners out there just need to decide, are you going to be able to hit 70 on your own quicker, or 300 with other people quicker? Probably the 300 with other people, but it's like, how do you all get there? So I'm glad that you're consciously putting all the things in place to get yourself there. So I think that's really awesome. I want to know, like, what's the motivation behind that 300 personal goal? Is it just the freedom part? Like, what's really pushing you there to that goal?
The biggest thing when I find you guys are the FI guys, right? The financial independence, right? The biggest thing for financial independence that I believe it allows you is time, the freedom of time. And so when I was an engineer, I lived in Indianapolis, and my grandmother was probably about 40-minute drive away from Indianapolis. I did not get to see her. This is like the end of her life, last phase of her life and stuff like that. I physically did not have the time to drive 40 minutes to go see my own grandmother, because I was just working nonstop, and the weekends we were working and stuff like that. And that was one of the huge things why I left engineering in the first place. I was like, this is terrible. This is not how priorities should line up in anybody's life, right? It should always be family first, right? And as soon as I left and went into real estate full time, there was a point where she suffered a bunch of health issues, multiple strokes, and she was this is the last couple months of her days there. And I am there spending 8 hours a day with her, coloring, reminding her who I am, like just stuff like that. that I will never forget. And it was only made possible through having control over my time. Right. And so that's the biggest thing with financial independence is if you can get to a point in life where you get to choose how you spend it, where you can actually rank your priorities as they should be ranked and not be dependent on a 9 to 5 for all of your income, then that for me is kind of my why I'm doing this, why I keep doing this is like, I want to do this obviously for me and my family, and why we've even helped other people with our no stress DTS system is like, I want other people to experience that as well.
Mm-hmm. I think that's incredible, Justin. I mean, I think a lot of people don't appreciate how your world opens up when you have the time and flexibility to do things that are important to you. And you've discussed this in two different fronts. The first way you discussed it was being able to shadow somebody who's got 3,000 units and scaling your business from learning from that opportunity. And the other part is spending time with family and doing those things that aren't necessarily money motivated, but mental and personal. So once somebody reaches that position where they've got assets or income that they can utilize to generate that freedom, like the world really, it opens up. And like I know Patrick has experienced that with leaving his job, and I'm kind of teetering in between, and I'm like right on the cusp of being there, and it's just like it's fuck you money. That's what it is. I mean, you think about the things that you would otherwise have to do, and you could just say, I don't feel like it. I don't like that. I'm going to go do something else. And you can pick and choose. And I think that's what's super powerful. But, on your path to get to that 300 unit, which you're eventually going to 10X to 3,000, I know you will. What are some of those obstacles that you think you're going to be facing to get to that goal? Like, what are some of the big roadblocks that are in your way?
Yeah, biggest roadblock we're seeing right now is just simply deals, getting deals, finding deals. We're obviously kind of the value I provide to partnerships is the deal sourcing side of things. So I'm very, down in the weeds with it and can see a significant shift. So that'll always be an issue, I think, for anyone. Now, once I get, there'll be a certain point where the direct to seller type business off market deal flow is back, right? We'll be in a better market in a couple of years, and it's more consistent. The goal for there is then actually kind of take a step back, right? I want to have that self-sufficient, and then I want to be focused more on the people side of this business. We're making strategic partnerships that are going to be necessary for taking down larger deals, right? So capital partnerships, lenders, family offices, stuff like that, where these are the kind of the big time people that are in the space. And that's kind of who I want to, like, I'm good at building relationships and stuff like that. That'll be the best use of my time. So right now, finding deals, biggest issue. In the future, it's going to be, all right, how do I make it self-sufficient on the deal finding where I can actually transition to more strategic partnership relationships?
Fantastic. Man, Justin, this has been a packed hour, man. Like I know I'm definitely motivated. I'm super inspired by this, man. And I think this is a perfect transition into our last segment of the show that we call the Big Four.
Big Four.
James, take it away.
All right, Justin, tell us and our listeners something that you do that is a financial independence cheat code, something that's really been a hack to propel your finances forward.
Finding deals yourself is definitely helpful. The reason it's a big hack is because besides, obviously, everybody needs a deal to move forward. The other thing that's a hack is you now have control over this property and the future of this property. So that means you get to choose who you partner with, if anyone, right, Patrick? If anyone. And usually if you're doing a direct to seller, it means that financial independence is, expedited because you're getting bigger discounts on these purchases.
Fantastic answer. I love that one. I absolutely love it. All right, number 2, we call this one resources. So are there any specific book, podcast, or people that have really shaped your financial independence journey, your mindset journey that you haven't already mentioned already?
Mastermind. Everybody needs to join one. Obviously, you get a little educated first. Don't try to join one right off the bat. But for me, I'll do another shameless plug. The Make It Happen MIH Mastermind has been insane for me, right? My mentors and those have over 3,000 apartment building units. And to be able to pick up a phone, reach out to them when you have any sort of business need is well worth whatever price point is charged to join a mastermind, right? So get online, type up masterminds when you're ready to be dangerous as an investor. And those are going to be the best thing you can do to start getting surrounded with the right real estate people in your network.
Freaking awesome, man. Awesome, awesome, awesome. James, number 3.
All right, Justin, I'm curious to know what you're going to say on this one. It's 5 years in the future. You know, where's your business and where's your life personally?
So we're at 300 units. We're in my 30s now, financially independent. What I'd like to do is maybe be in the same spot for once. So my personal life, my fiance is in the medical world, right? She's an orthopedic surgeon, resident right now. And so we've been moving around all over the place, Midwest, Michigan, Orlando. In 5 years, we're going to move somewhere else because she's doing through the Air Force. So I'd like to, at least at some point, maybe just stay in one spot for a little bit. That'd be kind of nice. So hopefully the financial independence will have kicked in there and she'll have the job locked in at that point where we can actually start putting down some roots.
I don't know, man. You're going to be touching all these new markets that you'd be getting into and making new deals. So you're going to be tapped out where you're at currently. Who knows? Might be a benefit.
As long as I'm near a large airport, I think my business runs effectively. If I can get on a plane and be anywhere in a couple hours, we should be all right.
Good.
There you go. There you go. All right. And our last question of the show is for our listeners out there that feel a little bit more motivated, a little bit more educated, are really inspired by your story and want to continue to follow along your journey to those 300 plus units. Where's the best place for them to follow along and reach out if they want to connect with you?
Love that. Yes. So connect with me. I am the Cashflow Cowboy on Instagram. That's going to be the most effective way. I put up all kinds of stupid stuff with a cowboy hat and also educational stuff regarding real estate and my journey out of 9 to 5 into 300 units by 30. So definitely check me out. It's a lot of fun. I try to make it more interesting than your cookie cutter type profiles. Now, for anyone, if they missed it earlier, No Stress DTS is another way to get a hold of me and our team if you are interested in going down that route of building out direct to seller platform. So reach out to us there, schedule a time to book a demo. We'll talk to you there. And then I mentioned it about transactional lender contact. If you want to reach out to me on Instagram or Facebook about that, please do. I'll connect you guys there. For anyone looking to do kind of double close wholesale. And then also anyone in the direct to seller space, we like to help out where, you don't know where to start for getting a list of properties. Reach out to me as well through one of those platforms and we'll send you a masterclass on kind of list sourcing that might be beneficial for you.
Freaking awesome. Freaking awesome. Well, I know this has been an awesome hour plus talking with you. I'm all jazzed up. For the listeners out there, if you like episodes like this, if you like guests like this, make sure to send James and I a DM. If you have someone you think would be awesome for the podcast, let us know. If you haven't already, please leave us a review. I think we're hovering around like 73. We're trying to hit that 75. Go on Apple, Google, Spotify. Leave us a review. That's all we're working here for. We're working for you and those reviews. So go do something. And with that, we'll see you next time. Peace.
See you guys.